Okay. Hi. So I'm starting to learn I have started my trading learning actually, and now I've started my back testing, and I'm using ICT strategy for all this. So I'm starting my back testing journey from January of 2026, which is like 4 months uh, before the current date, which is it's April 7th, 2026. It's my local time is 12 p.m. CST. So first things first. So let me take out all of these. So this is my EURUSD futures, which is 61. So okay, going good. So first things first, just uh, I'm just following like how uh, we see uh, we should see trading every day. So starting January 2nd, which is a Friday, we don't have much of impactful news on that particular day. So all of them are minimal impact. So let's go to the chat. Okay, let me just change it to futures. Okay. So I'm following this workflow. Like first things first, determining higher time frame bias, which I'm going to use daily and 4-hour charts to like identify the overall trend, and then we can like plot the previous day's low and high, and we can jump on to 50-minute chart later on. And after that, we have to move on to Asian session range and mark those as well, like the highs and lows, and if we see any liquidity pools or equal highs, equal lows, like the double top, double bottom. And so this is the most important part. We have to mention the sell side and buy side liquidity, because orders or stop orders institutions look for. So right now I'm using EURUSD, and I'll also walk through London and New York hours as well. So yeah, this is the most important part for me. Do not trade yet, just watch. So this is my back testing stage, so I don't want to take any trades. Maybe once we are done with all of the 3 to 4 months of trading back testing, we can use demo account. We can use that 100K which trading view demo account offers. We can place some trades to see how we are doing. And okay, let's start with the higher time frame bias. So here is my higher time frame, which is daily. Let's find where's June 2nd. So first things first, here are the, if you see, here are the equal lows. Let me just mark it. Okay, let's move it. Right, I'll go with like this. Okay, and we also see equal highs here. Highs means it's not like it should be matching like pip to pip. Even these can be considered as equal highs. I'm selecting equal highs. Right, it's more like a range, and we can also consider this as well. We get like 3 points. Right, okay. This is in November and December 2025, and from here on it went to make it more looks like consolidation, and it broke this equal highs and went on to make a high here. So let's mark this one as well. Okay, I can just save this. Let's say hi. Mostly I try to use black because it we don't have to. I mean, when you see green and red, it pumps up your adrenaline, and it's not that good. So I just feel like using green and black. Okay, this is I marked it as high, and anyway we'll be needing low as well. So this will ease your this will help you out actually. Okay, right. So it's on this. So right now, good. Okay, now from here on, we see bearish trend making red candles. So where is Jan 2nd? This is Jan 2nd, right? Okay. Let me zoom in. So as where our trend is bearish, let's mark day high as well as okay previous day high. So this is Jan 31st December and Jan 1st is market close. Okay, I'm treating this as previous day low. Okay, hope if we can see this. Okay, now once done, we need to see if we are missing. Also, if you can see here, it went on to make this high. Let me move this. Use path. So if you can see from this equal highs, it went on to make highs and it came down to make a low, then a high, right? So we can see equal lows here. So let's mark this as well. Sorry, lows, right? Try to on this particular day, which is on 19 December, try to pierce that equal low, but it couldn't. So it left a big right. If you can see, it's right down here. Okay, let's move this a little because it is pretty much close to our daily candle. So let's do this. Now let's jump on to 4 hours. So this is where we are, and let me zoom in a little more. So yes, this should be our previous day high, and this is previous day. Let us be accurate actually. Okay, 2026 and 1st and Jan 2nd. Hold on. we get where are we right now? Right here. Okay, so I guess you can hear me loud and clear, or else I have to record it once more. So I'll try to keep this as short as possible. Right here, right? We are hitting that previous days. This is the previous day high, which is from December 31st. Okay, that's good. Yeah, we are straight. All right. First, second. Now, as we are in a downtrend, there is a little upper move, and so this is what we have the candles. So let's consider, let me frame some boxes and mark it as SSL, which is sell side liquidity. We can use light, or just you can mark it little red. Okay, so I'm just leave it as liquidity. You can correct me if you feel I'm doing anything wrong, and buy side liquidity. I'll turn it to green. Buy side liquidity. Yes, I save both of them. So buy stops rest above the highs, right? So I mark it above the previous day high, and same with the sell side as well. It's not like I try to keep it to like 10 pips, 10 to 20 pips. That's buy side liquidity, and this would be sell side liquidity, and this previous day low. Okay, let's keep it like this. This is from 31st December, 31st Jan. So it went on to take out that buy stops, and came down. This is on a 4-hour time frame, and it went on to go down and take out that sell side liquidity too. Now let's jump on to 15-minute time frame. We already have it here, so we can use that. Let me change the date to Jan. So it after taking all that buy side liquidity, came down all through the it fell all on the London session, and try to retrace, collect some orders, and see the retracement. There is an order block right here. I'm using basically I'm using Lux Algo's sessions for for noticing these sessions. And this is ICT Kill Zones Toolkit, which is I find this is the London. This is the London session. Yeah, this only kill zones. It only try to identify the kill zones, not the entire session. But I sometimes use both of them just to be sure. Okay, let's it is easier for us to use both. Okay, so here there is a fair value gap. Let's mark this fair value gap. FVG, right? It went on. If let's see if we are able to find out any order blocks or here a fair value gap here as well. I think most of you know that how fair value gaps and order blocks work and how they can be drawn. It's just if it's more like let me explain it here as per my understanding. So whenever you see something like an institution buying or big moves upward or downward, it creates a gap between. Let's think this as first candle. This is a red candle. It is black. Don't black is red. So this is first candle and this is a third candle. You see a big green candle which is uh, creating that gap between first and third candle, which uh, there are we consider it as some orders will be left over because of that sudden price move. So most cases institutions try to touch that fair value gap again to collect those orders as well. So that's what if you can see here in the New York Open. After the New York Open in the New York AM session, it rallied all the way up to this fair value gap to collect all those orders, and it fell down into the New York Open and London close. I guess this is pretty much 10 to 11 is more like the London close session. London close session is more all about in most of the cases you see retracements from the New York Open, because all of the orders they try to close the buy or sell orders. In this case, they close all the they just sell off all the orders to make the money. That's all. So New York PM, and you see a fair value gap here as well. Let me draw a fair value gap here as well. Okay, and next is and the second is Friday, and as Saturday, Sunday are closed sessions. Market won't be open, so they try to sell off these orders, and here you can see market consolidated, right? Okay, this see if we were able to follow all of this. So here, if you remember, the higher time frame bias is bearish. So I want to talk through one of the theory here. So when it is when the bias is bearish, let me explain it here. That will be 10 minutes. Daily. Let's go to daily. So whenever the bias is bearish, previous day highs and lows, it always tries to uh, come out of this previous day's low to confirm that bearish bias, right? It already came through, but we expect it to close below this. I'll explain one more thing here later on in our videos. When both the previous day high and low are taken, just remember this: whenever previous day high and low both are taken out, it is considered as either a reversal or maybe something like a retracement. That's what we see in the next day's green candle here. We try to confirm it more in our next videos. Let's finish off this video with whatever information we can. So we finished the first point, which is the higher time frame, which is bearish, right? Both on a daily and 4-hour charts. We moved the previous day's high and low, right? This is the high and this is the low. It is a little messed up, or I can do this low here. Okay, this is cleaner, right? Okay. Identify equal highs and lows. You can, in this case, we're probably talking in the next video. We can mark this as equal highs and lows. We marked it already. So if you see this one, yeah, this is an important point. I sorry to forgot. Sorry that I forgot. As in the higher time frame there are equal lows, it will try to hit this and try to collect. Whenever we have an equal highs and equal lows, most of the orders will be stacked up there. So it will try to this will be sell side liquidity here as well below this. So it will try to collect these orders as well. So it will definitely hit through this. So just remember that there will be stacked orders below this sell stops. Okay, so this is sell side liquidity again. So from here on, it tried to hit this equal. It already tried to hit this equal lows. It failed to pierce through this, and it went on to retrace upward. Hit all through this fair value gap, and came to this and consolidated towards the weekend. Okay, that's that. Yeah, let's finish. We identified the equal highs and lows. We labeled by our sell side liquidity, which is buy side liquidity on the previous day high and sell side liquidity on previous day low. And yeah, and also above any swings, there is even these are swings too, right here, because they are creating fair value gaps. Even this is not a considerable fair value gap here, but this is a good fair value gap to be noted. So they'll try to collect all those orders. Fair value gaps. Even you see fair value gap here as well. So that's a strong selling momentum. So it tries to collect all those orders. So it came back to that and hit through this. We can definitely assess this fair value gap because it is trying to, as it is bearish, maybe we can sell short. Probably most of them try to use that 50% rule, or sometimes it just tries to hit these and I'll consider the swing here, or we can put risk above that previous day high. And we can aim for all through this previous day low or the equal lows, because that is absolutely where institutions want to pierce through. So that's a good risk reward ratio. 5 is definitely a plus plus setup, I'd call it, but I don't want to name this one. So that's it for this video. Maybe we can meet with the next day's session soon. So thank you. So if you feel that I had any wrong assumptions, I'm definitely learning, so feel free to correct me. Yeah, thank you.